Kings and queens. So today we want to dive into the realm of dynamic price and time trading. So there are only a few topics. It's only three topics that I want us to look into. So I want us to look into, firstly, supply and demand zones. So I know most of us are very much familiar with this word, or should I say this phrase, supply and demand zones. I know you've heard about it, you've used supply and demand trading, you've watched a lot of tutorials on supply and demand zone trading. Okay, so what is it that is new that I'm here to offer? Yeah, so goes on the saying, there's nothing new under the sun. There's nothing new that I'm here to offer, but I'm only here to help you understand market imbalances and potential trading opportunities that arise within those supply and demand zones. So that is the first topic that I want us to look at. So the second one is navigation of time frames. So what is it that is important here in knowing how to navigate into different time frames? As we understand that on our MT5 platforms, we are presented with a variety of time frames. We have your monthly time frame to the smallest time frame that you can imagine, that is your M1 time frame, right? So I just want to help you master how these multiple time frames help you gain a deeper market perspective. These time frames are not here to confuse you or to give you different data on your trading opportunities, but they are just here to bring everything into sync, help you understand and deepen your understanding into what is it that you should do on the market. Should you buy on this 30-minute interval? Should you sell on your 15-minute interval? So you should be able to juggle between these time frames as a trader comfortably. Each time frame shouldn't present to you a more difficult situation to trade, but on the contrary, each time frame should help you understand, help you see a clearer perspective on your trading endeavors. So that is on my second topic that we are going to be looking at today. So the third one, that will be closing price trading. Yeah, I call myself a closing time trader. I use the closing time trading concept more on my trading activities. So how does this help you as a trader understand, or should I say, how does this help you as a trader in gaining more clearer trading opportunities? So there's just one trick to this. To me, closing price trading helps me leverage the power of all the daily market activities. When I'm talking about the daily market activities, I'm not talking about each and everything that was happening in the market during the last 1 hour, because on your 1 hour time frame, you do find the closing price of that hourly interval. On your H4, you are going to find the closing price of that 4-hour interval again. So basically, the closing price, it gives me that leverage in making informed trading decisions based on what the buyers and the sellers decided to do at the end of their particular trading session. Get the point? So that is what you will be looking into. So before we even get into much details of this tutorial, there is something that I call the rules of engagement. The rules of engagement. So I took time and drafted some notes here that I would want us to look into together, and then I'll try by every means possible to explain these points to you, because to me they are very important. So they are there also to help you understand what it is to be a trader and what it takes for you to become a trader. So I call these points my rules of engagement. The reason why I called them my rules of engagement is that because as you are trading, this is a lifetime commitment to some. To others, it's going to be a monthly commitment because most of us are going to quit. Yes, I've seen people quitting trading. I've seen people get serious on it because of a few rewards here and there. Well, that's none of my business then. But I'll just want us to look at these rules of engagement. On my screen there, I'm sure you're seeing where it's written King Arthur at Capricorn Kings, rules of engagement. So what are these? Very interesting. Very interesting. So I'll just read a point and then I will explain each and every point that I'm going to read. These rules of engagement, they are going to act as an introductory course that you could have missed out as you got introduced to forex trading, because the way this thing has been presented to us, that's not the way it is. We have had so many mentors, we have had so many people telling us that when you open a trading account, you are very much exposed to the opportunities of making $50, $100, $200 a day. But they probably left out something there. They forgot to tell us that you first have to look for the skill to make that particular amount of money. That money doesn't fall on trees just because you are now a trader, just because you now call yourself a trader. So these rules of engagement are there to remove some sort of thinking, and they are also there to help you instill a good trader mentality. So right with me there, I've got my first point there where it's written in starting market action. So what is it that is I call market action? Market action can refer to what you call price action, can refer to the buying and selling activities that are presented to us here in the form of these candlesticks, right? So this is basically just simple market action. As you can see, you've got red candles falling down, you've got green candles ascending, you've got red candles descending, so it goes on the pattern, right? So back to my point, in starting market action, nothing is more important than graphs or history of market action. So basically, in starting trading actions, in starting buying and selling activities, nothing is more important than these candlesticks, these graphs. Why are they so important? They present to us history of the market action that was there in the past 24 hours, in the past 2 years, in the past 1 month, in the past 1 week or so. So these graphs, they become what I call a roadmap. They become what I call a roadmap. I even wrote a rhetorical question there where I said, how can you travel from one point to a distant city without one? What was I referring to there? I was simply referring to the roadmap. So it says, how can you travel from one point to a distant city without a particular roadmap? How can you move from Zimbabwe to South Africa without you knowing the roadmap, without you knowing the road to use there? It's very much difficult. So are the charts there. Those charts that we have on our MT5 platforms, they are that roadmap. They will tell us which way to go, which way to turn right, they will give us as much detailed information as we need in order to make proper and resounding trading decisions. So what you are seeing there, stop treating these beauties as something which is there to confuse you, as something which is there to cloud your trading decisions. Treat this as your roadmap. Treat this as something which is supposed to tell you Should you buy there? Should you sell there? Should you hold this? Should you scalp this? Like, these are your roadmap, for crying out loud. These guys are your roadmap. They are your guide. They will tell you which route to use. They will tell you each and everything that you wish to know. It's not for your signal provider to tell you that gold is selling, volatility 75 is selling, boom crash, or whatsoever commodity that your mentors, that's how we call them, right? That our mentors tell us. They are not the ones to tell us that. They are not the ones to decide. But these candlesticks, these graphs, they are the ones to decide what you are supposed to do, which commodity to sell, which commodity to buy, which currency to sell, which currency to buy. Each and every instrument which is there in the stock market is being translated to